Welcome back, welcome back. Welcome to the channel. Welcome to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me, guys. I really would appreciate it. Guys, be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. Guys, if you want to keep up with me when I'm not on the airwaves of YouTube, do me a big favor. Get down in that description box. Click on that Richard Fain Millionaire Mentor Instagram link and give me a follow on Instagram, and then let me know that you're rocking with me. I really would appreciate that through DM. Just send me a DM to say hello, basically, and let me know you're rocking with me so that I can go ahead and say thank you. I really, really, really would appreciate that. So do me that big favor, guys, and I would appreciate it. Also, I need you guys to go do me another big favor, which is go check out the website, www.richardfain.net. That is the second link down in the description box. Go check out the website and take a look at those digital products that I got available for you guys to collapse time frames and get you to your pot of gold at the end of the rainbow faster, quicker, more accelerated. Do me that big favor as well. Like I said, it's the second link down in the description box. Also, while you're there on the website, check out the Wealth Builders, fastest growing financial community on Patreon. We got 1,000 plus wealth builders, and we have a good time over there. Lot of love. We talk a lot about financial freedom. Now, the strategy and the community is built around this particular strategy, which is traditional investing, right? None of us are experts. None of us are trying to tell each other what to do, what to buy. But the community, which I started about 4.5 months ago, the community, basically the mission statement, the investment mission statement is traditional investor, buy and hold, big boy blue chip, long term. That's the strategy. That's the investment mission statement that we've created this a community around. Now, if you want to be a part of that, like I said, go through the website, click on the membership button, click on the join button, and come join the Wealth Builders. Get yourself a part of this financial community. Like I said, fastest growing financial community on Patreon. Now remember, like I said, that's the strategy. So we're not adapting no other strategies. That's the strategy. That's the mission statement. So if you want to be a part of that mission statement, you want to be a part of this community, please understand that's what we rock with. We rock with traditional investing, buy and hold, big boy blue chip, long term. That's the strategy, right? Now, that doesn't just include paper assets. That's real estate for investment. That's businesses, right? We also, because in my opinion, a traditional investor, you can be a traditional investor in paper assets, real estate for income, and businesses, right? So that's what that's the mission statement. That's the investor mission statement. So make sure you understand that when you come over there, because we ain't rocking with no other strategies over there. So, I'm going to come in and join and bring my own strategy. Oh, no, you're not. You go start your own community with your own strategy. That's the strategy we're going to adapt, because that's the strategy we believe give us the best chance to build wealth and get to financial freedom. The whole thing is about what? Taking your active income and turning it into passive income through assets. Because at some point, I ain't going to be able to trade time for money anymore, and I'm going to need some assets to be able to generate some money and take care of my lifestyle. At some point, I'm not going to be able to trade time for money. And if I don't have no assets, I'm going to be in trouble. I'm going to be in financial trouble. So that's what we talk about and try and help people protect themselves from, is getting in a scenario where they can't trade time for money, whether it be illness, just too old, got to take care of somebody at home, can't, whatever it is. When you get in a situation where you can't trade that time for money, you better have some assets that know how to generate money, or you're going to be in big trouble. So we try to help people in the wealth builders get to that pot of gold at the end of the rainbow. So if they do want to stop working at some point in their life, which I hope all y'all do, I don't know nobody that want to trade time for money for the rest of their life. I didn't, right? And I don't think anybody else out there does either. People want choices in their life. They want freedom and they want time. But you can't get any of those three things unless you do what? You better have some assets that generate income without you doing anything. So like I said, get over to the website, www.richardfain.net. Second link down in the description box. Come join the wealth builders and check out them digital products to help you get yourself in a position where you got some confidence in your investment skill set and you'll execute. You got no confidence in your investment skill set, you're not going to execute, right? You're just going to sit on the sideline and do nothing and let the wealth pass you by. I told y'all this is a wealth transfer. Next 10 years, a wealth transfer. Wealth is going to be transferred from the 1% to the 99%. It depends on what your execution level is. What your execution level is will decide how much of that wealth transfers to you, right? Last thing we want to talk about, and we're going to dive into the topic of the day, and that's going to be Moo, my self-directed brokerage app that I am using, and I'm going to use it for the next 10 years to help me 10x my net worth. Whatever my net worth is today, guys, it's going to be 10x'd by 10 years, right? I'm gonna get a 1x every year. So from 2024 to 2034, I'm a 1x every year. Add them all up, it's gonna be a compounded 10x. And I'm gonna be using the Moo Brokerage app to help me do that through paper assets, right? Big boy blue chips, ETFs, individual stocks. So if you want to join me on that journey using the Moo Brokerage app, get down to the description box and click on that first link. Now, the wonderful folks over there at Moo gonna give you a nice little bonus when you try out their brokerage app. They're gonna give you a bonus. They're gonna give you up to 15 free stocks, publicly traded stocks, when you open up your new Moo Brokerage account and you try them out. If you put $100 in your new Moo Brokerage account, they're gonna give you 5 free stocks. If you put $1,000 in your new Moo Brokerage account, they're gonna give you 15 free stocks. So, hey man, don't delay, act today, right? Treat yourself, don't cheat yourself. Go ahead and get yourself up to 15 free stocks and instantly start building your net worth. Remember, the net worth is what generates the passive income. Zero net worth generates zero passive income. This does. The math is pretty simple. The math is pretty simple. You build no assets, that you generate no income when you can't work no more. And at some point, you ain't gonna be able to work. Now, some of y'all, you might want to work. If you want to work to 75, 80 years old, go right ahead. That's not fun. I don't care how much you love what you do. If I got to do that, then you don't really love it no more. See, the only time people really love what they do is when they really don't have to do it. They do it because they love it. They don't do it because they need the money. They do it because they just genuinely love what they do. That's typically how it works. Typically, when I'm forced to do something, I don't really love it. I don't really love it when I'm forced to do it to take care of myself and feed myself and my family. I don't really love that, right? I really love things that I want to do that I don't have to worry about money. I want to go out and do things that I just really want to do and don't have to worry about, oh golly, how do I squeeze a dime out of this? How do I squeeze a nickel out of this? That takes something from it, right? So all I'm telling you is, if you want the ability to be able to do the things that you really want to do in life and not have to worry about how you're going to pay for any of it, get you some assets. And it starts with that Moo Brokerage account down in the description box, especially if you're buying paper assets. You're going to need one of those brokerage accounts. Why not get yourself up to 15 free stocks? Like I said, man, get down to the description box, click on the Moo link, go get that free stock, go get that free money. Send me an email through the website, www.richardfain.net, second link down in the description box. Send me an email and let me know you opened the Moo account and you'd like to get the tutorial videos that I'm going to send you so that you can learn how to use that thing and get yourself in a position where you can start buying some big boy blue chip paper assets. Now, I'm not here to tell you what to buy, when to sell, and none of that good stuff, because that's on you. I'm not an expert. I'm just a regular guy here on YouTube giving y'all my opinion. But now you certainly can look at what I'm buying. I can send you my blueprints, Wealth Transfer Blueprint 1.0, 2.0, which will outline what I'm buying over the next 10 years to 10x my net worth. And I'm using the Moo Brokerage app to do it. Right? One of the main vehicles I'm using is the Moo Brokerage app. Now, I got more than one brokerage account, guys. I got about 4 brokerage accounts, and I use them for various different things, right? But the Moo Brokerage app is my primary brokerage app that I'm using. So, hey, man, if you want those 15 free stocks, up to 15 free stocks, get down in the description box, click on the Moo link, and get yourself started today. Don't delay, get started today. Well, all right, guys, let's dive on into this thing. I ain't gonna hold you long. About 12 o'clock, I'm gonna end this thing. So I ain't gonna hold you long, but we do got a lot of ground to cover. We got a lot of stuff going on. And obviously we're in the month of September. Historically, the month of September has not been a great month for paper assets, at least not from an appreciation standpoint. It's a great month for someone trying to accumulate paper assets at a discount. Hey, Richard, I'm trying to build some wealth. It's a great month to accumulate. See, to accumulate wealth, right? To build wealth is when you can accumulate in the red, and you hold that potential wealth till it goes to the green. And that's where you go ahead and collect the wealth, right? So historically, September has been sort of like a not real good for appreciation. Matter of fact, typically paper assets depreciate. They lose a little value in September. Go look at the last 4 years and you look at the broader stock market. It's sold off. Assets have come down about 5%. On average over the last 4 years, historically. But if you're somebody that's trying to build wealth, that's a good thing. Because now you can swoop in, pick all these good assets up, all these big boy blue chip paper assets, you can pick them all up at a discount. You can pick them up at a discount. So not bad for someone that's trying to build wealth, right? So here's the situation though. You got a major bank that's come out on record and said, listen, they're warning that there could potentially be a Fed crash. A Fed crash warning, that's what they call it. Here's the headlines. Fed crash warning. And we're going to talk you through. And for you crypto folks, pay attention because it involves crypto too. Crypto is already starting to tick itself down. Right? The last time I looked at crypto, what was it at? About 50. When I say crypto, I'm really talking about Bitcoin because that's the only one that really, that and Ethereum is the only one that make any sense. The rest of that stuff y'all buying, that ain't gonna make no money. Bitcoin and Ethereum are the only 2 real cryptos. The rest of them things out there, Doge, Sheeb, all the rest of the other, Solaris, all this other stuff, So let's take a look at Bitcoin, and then we're going to start this conversation. So right now, Bitcoin is about 57,124.52. That's what Bitcoin is right now. So yeah, still, it's still relatively, if you bought at $15,000 a coin, or if you bought at $20,000 a coin, if you bought at $30,000 a coin, you're in good shape. All of y'all that bought at that 60-something a coin, you ain't in good shape right now. You're not in good shape if you bought at the peak of this thing. But for those of y'all that were smart and bought this thing on the pump, you're probably still in good shape, but you might want to pay attention to what this major bank is saying, because it may help you out a little bit. Goldman Sachs issues huge Fed crash warning as a legendary trader suddenly flips his Bitcoin price prediction. Just saying, man, be careful out here. I got to be careful out here in these Bitcoin streets. Got to be careful out here in these streets with these stocks. Got to be careful, especially in these Bitcoin streets. You got to be careful, because y'all know how I feel about Bitcoin. It's the greatest pump and dump Ponzi scheme in the world, right? So that's my opinion now. I'm not, that's just my opinion. But let's talk about it. Let's talk about it. Bitcoin has been struggling over the last month as the Bitcoin price teeters on verge of a critical tipping point. The Bitcoin price has almost doubled since the beginning of 2024, but has lost momentum in recent months as traders panic over the Federal Reserve's plans for monetary policy. Now, as the Fed has been warned of a US dollar crisis that risks spiraling into total collapse. Remember last week we talked a little bit about the US dollar and how they got these warning signs, and with rates coming down and all this other stuff, people think the US dollar gonna collapse. Well, Goldman is kind of giving their little 2 cents on that, right? Check it out. Now, as the Fed has been warned, of a US dollar crisis that risks spiraling into a total market collapse. Stocks, crypto, you name it. Goldman Sachs analysts have issued a warning that this week's closely watched jobs numbers could spark a stock market crash. Now, this ain't coming from Richard Fain or some other, unqualified YouTuber. This is not coming from just Richard Fain and other unqualified YouTubers. What it's coming from is Goldman Sachs. They're qualified. They are definitely qualified. So Goldman Sachs says, hey, Goldman Sachs analysts have issued a warning that this week's closely watched jobs numbers could spark a stock market crash, while legendary Bitcoin trader Arthur Hayes has admitted his previous Bitcoin prediction was wrong. Now, again, y'all know me, I'm gonna always come back to you and give you my little 2 cents. Since I got an unqualified opinion, along with the rest of these YouTubers, we got unqualified, because we're not qualified, right? But Goldman Sachs is. These guys are qualified. And they're telling you, listen, be careful out there. Be careful out there in them Bitcoin streets. Be careful out there in them stocks streets, because there's some bad news out there. There's some bad actors out there. Be careful. Be careful. Because this jobs report could spark something. Now, if any of you guys have been paying attention, ADP came out with their numbers today. ADP. Now, ADP is private payrolls, right? Doesn't include government and all these other stuff. It's just the private payrolls from the private sector. And I know you're thinking, oh, they're public companies, but they look at it as private, right? Private payrolls, companies, right? When we'll talk about that in a second, because ADP gives you sort of a little glimpse into the big boy report that's coming out tomorrow, which includes everything. So see, the thing you got to understand is you got 2 sides of this thing. On one end, we want the Fed to reduce interest rates, right? So you can look at this report 2 ways. You can say, well, okay, We want the report to come in weaker than expected because that will make sure the Fed reduces interest rates to try to fight what? A weakening jobs market. That's on one hand. So that's good news for us because we want rates down and we want the Fed to believe, okay, we need to get these rates down. On the other end, where it works against us is traders, Wall Street traders, big boy investors, look at that report and say, well, golly, if the labor market is weakening, that means the economy's in trouble. We need to get our money out of these companies and bring it to safety. So it's a two-edged sword. On one end, we want the report to come in weaker than expected so that the Fed have some urgency around trying to save the economy, don't go into a recession, let's reduce rates. But on the other end, you got these big boy investors are saying, hold up, guys, weaker than expected labor report. That means at some point, somebody gonna lose their job. At some point, people gonna start spending money. And then boom, we in a recession, we in trouble. Rates may not save us quick enough because the Fed waited too long. Fed should have reduced rates back in July. So that's what investors, these big boy investors, that's what they're saying. And then on the other end over here, so my point is, we don't know what's going to happen tomorrow. This thing could bounce, it could sell off. We don't know, right? Goldman Sachs is trying to give you a little bit of heads up, right? They're trying to give you a little heads up. Goldman Sachs analysts have issued a warning that this week's closely watched jobs numbers, they're just talking about the jobs report that's coming out tomorrow. It's coming out tomorrow. That's what Goldman's talking about. The job numbers could spark a stock market crash. While legendary Bitcoin trader Arthur Hayes has admitted his previous Bitcoin price prediction was wrong. This is coming from one of you Bitcoin guys and gals. This is one of your guys. He's saying he was wrong. What does he mean by that? We'll find out. Let's find out. A market correction may start to get traction if payrolls are weak on Friday. Now, a lot of us wanted payrolls weak because that would encourage the Fed to reduce rates. Now, all of a sudden, if payrolls are weak, stock market crashes. So it's hard to follow this thing, man. Here's the thing, though. For people that are trying to build wealth and they want to use paper assets to do it, you want assets cheaper. You want them trading at a discount. You don't want anything fundamentally wrong with the company, but you do want the market behavior and the market manipulation to be greater because that drives down the stock price of great companies that you can then pick up cheaper. And then you hold those companies until all this stuff blows over and they go back up in value. That's where the wealth comes from, guys. So if you're somebody sitting out here saying, golly, man, my back is against the wall. I got a little bit of net worth. I got some extra money here I can invest, but I got a little net worth. I need to take this little money that I got and put it into something, and then 5 years or 10 years from now, turn it into big money. How do I do that? Well, the way I do it is I find situations like this. I find great companies that are trading at a discount but it has nothing to do with them because they're still solid companies, good business performance. It's just market driven. If big boy investors panic and they feel like their money gonna get caught up in something that they don't want it caught up in, they're not gonna invest. And if they don't invest, stocks go down. If they don't invest, Bitcoin goes down. If Bitcoin whales don't invest, Bitcoin goes down. And that's what y'all start seeing with Bitcoin right now. Remember, it was at its all-time, it was, I don't know, it was up in the 60s. 67, something like that, I don't know, somewhere up in there. But now it's down to 57, and it could come down further, right? Is that an opportunity? Is that an exit? I don't know. You got to figure that out, right? But what I'm telling you is, for me, if I'm trying to build wealth, I am okay with my major ETFs, my big boy companies going on sale for a little bit. And they'll probably go on sale for a couple of months, because when you're on the other side of the election, Things going back in the other direction, in my opinion. So you got the next couple of months, you got an opportunity if you're a wealth builder, if you're somebody that wants to transfer wealth to yourself, great opportunity when things are down and they're great companies. You can scoop those great companies when they're down, right? You look at a great company like, take any of your great companies that are trading lower right now. It's a great time to buy a great company when it's on sale. It's not on sale because the business is bad. It's on sale because the overall market behavior. People are just, it's volatile. Nobody wants to lose any of their gains, right? Big boy investors, January through June, killed it. They've taken those gains and they've taken them and put them over in money markets for right now. And the reason they're doing that is because they don't want to give up those gains. And then what they'll do is when the election is over, they're going to sneak back in and grab some more gains in the back half of the year after the election. And then they had a great year. So while they're out of the market right now, again, Wall Street traders, you got to watch out for them, the aliens. You got to watch out for them aliens because Wall Street traders will trick you. Don't let them trick you. But over these next couple of months, it may be an opportunity for somebody to pick up great companies, great ETFs, great index funds at a discount. And then you just hold them. Right? Goldman Sachs is telling you, hey, get ready for that. It could happen. They're not saying it will happen, but it could happen. Like I said, now you got to watch out for the aliens, AKA Wall Street traders, because these guys, man, they got a stun gun for you. You better watch yourself. They'll stun you. You'll be stuck for 2 months, just like this. You'll be stuck just like this for 2 months. You better watch them. Just watch out for those aliens. Let's move on. So the market correction may start to get traction if payrolls are weak on Friday. This is the managing director of global markets and tactical specialists at Goldman Sachs. Goldman Sachs is a big boy blue chip firm, guys. Go check them out. Go do a little research on them. These guys ain't fooling around. They're giving you a fair warning, right? They're giving you a fair warning. You got two sides of the coin, right? You got people that are in the enjoyment stage of wealth, and then you got people that are in the building stage of wealth. For you people in the enjoyment stage of wealth, they're telling you, listen, you may want to go to safety for a little bit. You may want to take your wealth to safety. It's going to get bumpy. These next couple of months, you might want to consider moving to safety. If you already got your wealth built and you're living off of the wealth, the income that the wealth is creating, you're living off of it. They're telling you over the next couple of months, you may want to move to safety because it's going to get bumpy. On the other end, if you're in the building stage of wealth, they're telling you this, listen, guys, you got a tremendous opportunity ahead of you over these next couple of months to pick up some really good assets at a discount. So you got enjoyment stage of wealth, protect your wealth. You might want to flee to safety. And then you got building stage of wealth. Hey, guys, get ready. An opportunity may be presenting itself where you can actually build some wealth here over the next couple of months. That's the way I look at it, right? You guys may look at it differently, but that's the way I look at it. Got two ways to look at this thing. Building stage of wealth, enjoyment stage of wealth. Enjoyment stage of wealth may be an opportunity to move to safety. Building stage of wealth may be an opportunity to get you some wealth. Move into this thing. Move into this thing. Lean into this thing and transfer you some wealth over the next several months. So you got to figure out what your situation is, but that's my interpretation of what they're saying. And again, I'm not a financial advisor. I'm not trying to tell you what to do. I'm giving you my opinion. All right. So let's keep moving. Friday's payroll report, which Fed Chair Jerome Powell last month said will inform September's interest rate decision, is expected to show hiring and wage growth picked up in August. The Fed is now widely expected to begin a rate cutting cycle at its two-day monetary policy meeting that begins on September 17th. Yesterday, labor market data and comments from the Federal Reserve official bolstered the case for an interest rate cut. It was reported by Reuters. Bitcoin, crypto, and stock market traders are braced for hints that the Fed will need to adjust its plans for interest rate cuts month, as well as signs the strong U.S. economic performance so far this year is stalling. Rubner pointed to September being a historically bearish time for stocks, with the Bitcoin price also often struggling through the month, though the November election becomes a clearing event for risk assets, potentially setting the Bitcoin price up for a post-US election rally. Regardless of whether former US President Donald Trump or Vice President Kamala Harris take the White House. So here's the thing. Up until the election, bumpy. Could be, maybe. History says it could be bumpy. After the election, no matter who wins, could be a bounce. Why? Because something brand new is getting ready to happen. Everybody's energized. Everybody's saying, okay, we got a former president coming back as president, or we got a new woman president. A euphoria. Typically good news on both sides, right? Somebody gonna have good news, whether it be one side or the other, but half of the country probably be for one side, half of the country be for the other side. So at some point, you're gonna get some optimism and some euphoria after the election, right? So they're saying Bitcoin could do a bounce. Stocks could bounce. Nobody really knows. All we can do is follow the progress and prepare ourselves either way. That's what my job is for me and my portfolio, is to prepare myself to be able to do whatever it takes. And the only way I prepare myself, guys, is I buy big boy blue chip and I just stay in them long term. That's how I prepare myself. I've done that for 30 years and I've been fine with it, loving it. Meanwhile, the lackluster Bitcoin price performance over the summer has forced BitMEX co-founder, crypto trader Arthur Hayes to reverse his short-term Bitcoin price prediction. This is what he says. I have changed my mind, but it doesn't affect my positioning at all. Hayes, who started a family office called, I don't know what that name is, after leaving the BitMEX crypto derivatives pioneer, wrote in a blog post. Hayes had predicted a new Bitcoin price bull run would begin in September. That didn't happen. And he admitted it. See, even the experts get it wrong, guys. But yet and still, you get some guy on YouTube and you want to try to make sure, oh, he got it wrong. Oh, you got the experts get it wrong, and y'all think some joke on YouTube supposed to get it right. Come on, man. Come on now. Hayes is an expert in the Bitcoin world, in the crypto world. He got it wrong. But you think but you want somebody on YouTube to be right all the time. I don't care if the expert gets it wrong, as long as this YouTube guy gets it wrong, gets it right. He got to get it right, the YouTube guy. The YouTube guy got to get it right, but the expert don't have to get it right. Hayes had predicted a new Bitcoin price bull run would begin in September as the Federal Reserve, U.S. Treasury, and China all turn on their liquidity taps. I mean, it sounded good, right? It sounded good. I expect intervention to begin in late September, Hayes wrote. Between now and then, Bitcoin at best will chop around these levels and at worst slowly leak lower towards 50,000. Now, it's at 57 now, and we're at the beginning of September. Will it leak lower? We'll see. We'll see. Will it leak lower? We'll see. Hayes' new Bitcoin price prediction reflects a bearish warning from analysts with whatever that is, this week, who said they could see the Bitcoin price fall as low as $40,000 in the short term. So, all of you folks out there that are in Bitcoin, and I know a lot of y'all bought in above 40,000. A lot of y'all bought in above 40,000. A lot of y'all did. A lot of y'all bought in the 50s and in the 60s. A lot of y'all up there. So just understand what the experts believe could happen. That don't mean it will happen, but could. So position yourself, get your mind right. If you see your $60,000 coin go down to 40,000, get your mind right and understand what your position is. That's all I'm saying. Because it will play tricks on your mind, guys. It'll play tricks on you. If you're not in this thing long term and you don't know what you're doing, it will play tricks on you. When you see you done bought up here and that thing slide all the way down to here, that play tricks on you. You better get your mind right and understand your strategy, right? So think about that. Please, please, please think about that. And like I said, right now, Bitcoin currently is about, let's see what Bitcoin at right now. Yeah, still, whoa. It done bounced itself down to 56,479 a coin at the moment. So a little leaking has already begun. A little bit of leakage has already started moving. A little bit of leakage. So just be on the lookout for that. So let's move on. Let's move on and talk a little bit about what's going on here in, let's see what we want to start with. Let's go up here to the market. Let's see what the market is doing currently right now. And I'm talking about the broader stock market real quick, and then we got a couple other things we're gonna dive into. But let's look at the broader stock market. NASDAQ rises for first time in 3 days as tech tries to rebound. You guys know tech has been having a hard time. It has been. Institutional investors have fled tech, and they've left tech to the aliens. Institutional investors have fled tech, they've rotated out of tech, and they've left tech to the aliens, aka Wall Street traders. So the aliens are just beating this thing up, they bouncing it like a basketball, up and down, up and down, up like a basketball, up and down, up and down. So it's been tough. If you're a guy like me who is heavily into tech, and your mind ain't right, this will mess with you. Good news for me, my mind is right because I'm long. I'm long and I'm in a good company. I'm in good companies, the S&P 500. I'm in the information technology. I'm in the Mag 7. So I'm long and I'm in great companies. So it don't affect me. But for people who just getting started at this thing, it could affect you mentally, right? When this thing is like a basketball up and down, right? So this is what's going on. The NASDAQ composite rose Thursday following back-to-back losing sessions, as investors snatched up beaten down technology stocks ahead of Friday's keynote labor report. Now, what did I tell y'all what these Wall Street traders were going to do? I told y'all this yesterday what they're going to do. See, since you don't have institutional investors in this thing right now, they're on holiday. They're in money market accounts on holiday. See, they're on vacation. In money market accounts, having a good old vacation right now. So they done left the candy store to the aliens, and all the aliens are gonna do, one day they're gonna beat this thing down, next day they're gonna pump it up, and that's what they're gonna do. So Tuesday and Wednesday, what did they do? Beat it down. Now what are they doing today? Kind of running it up a little bit. This is what the aliens are gonna do, right? So just get yourself mentally prepared for that, because the aliens are they're gonna treat this thing like a basketball. And that's what you see. Now let's go check on the most widely and the most volatile stock in the country, Nvidia. So now Nvidia opened this morning at $104.98, guys. That was the open. Got itself up to 109.65. Now it's hovering around 107.62. So what does that tell us? If we go look at the volume, let's go look at the volume. Let's tell us that I'm gonna tell you what's happening here. At least in my opinion, you guys go do your own homework. But let me tell you what I think is happening here. Let me just make sure. Here we go. Let's look at this trading volume. Because I told y'all yesterday on this trading volume, you can tell what's happening, right? By just looking at the trading volume and looking at the stock price and if it's up or down, right? So now let's look at September. Let's go back and look at September 4th and let's see how much volume we had on September 4th. So we had 371 million worth of volume. This was on yesterday. Now, let's look at the stock price yesterday, and then we're going to talk about today. Now, here's the thing. Stock price opened at 105.41 now. Now, they're saying the high was 113.27. I don't know where I was because I don't know where I was. I don't know where I was. I missed that one. That it got to 113. I missed that one. So it said that the high was 113. The low was 104.12. It closed at 106. So it tells me we had 371 million in volume. I believe there were more buyers than sellers yesterday because the price opened at 105.41 and it closed at 106.21. So in my opinion, 371 million worth of volume, a lot of that volume was buying. Now today, what did we open at? We opened at 104.98. So what probably happened yesterday, what probably happened in my opinion was after hours, maybe there was more trading going on. I didn't follow it after hours. Once it was closed out, I was done. But today it opened at 104.98. It got itself up to a high so far today of 109.65. The low was 104.76. And currently right now it's at 107.36. And we already have about 145 million in volume. So you got what now? You got more buyers again. It's my opinion, guys, but you got to understand now on Monday, what did you have? Let's go back to Monday, September 3rd. I'm just trying to show you, in my opinion, how the Wall Street traders are bouncing this thing like a basketball, right? This is what they're doing, specifically in the tech space. So you go to September 3rd, day after the holiday, day after Labor Day, market opens. Market opens on this particular stock at 116.01. 116.01 now. Closes at 108. And you got 475 million in volume. What does that tell you? In my opinion, a lot of selling was going on that day. A lot of selling. So somebody last week got this thing up to 119. This thing got to 119 1 week ago Friday. It closed at 119. Right? So earlier in the week, somebody was buying, and then all of a sudden you get yourself to 119, and then all of a sudden, the day after the holiday, it tanks. Somebody was selling. You see where I'm going with this? So now, what do you got? A repeat of the same thing, right? Now today, what do you got? You got more buyers than sellers. Now, I don't know if it'll turn out that way at the end of the day, but right now, based on the 4th and the 5th, You got more buyers than sellers. Again, who's running this thing up now? Just telling you, man, this is just my opinion, guys. You got to do your own research. I'm not an expert here. I'm just giving you my little 2 cents. But for me, it makes sense that with the aliens control the stock market, because at least tech, I'm going to say the whole stock market, but definitely controlling tech right now, right? Because big time investors, institutional investors have rotated out of tech. Now, they'll rotate back in at some point. Maybe they'll rotate in December. Maybe they'll rotate in after the election, rotate back in. I don't know. But right now, they've rotated out. They're in money markets, or they're over there in small caps or somewhere. I don't know where they're at, but they definitely ain't in tech. The aliens are controlling the tech space right now. And what are they doing? They're running companies down. They're running them back up. They're running them down. They're running them back up. They're running them down. They're running them back up. That's what they're going to do for the whole month of September. That's my opinion. I'm not a financial advisor. I have no credibility here other than to give you my opinion, which that's what YouTube is. That's why I'm on YouTube. I give my opinion. You can go do your own homework, but I'm telling you, they are controlling the market. Now, you can look at that 2 ways. You can look at that as a blessing, or you can look at it as a curse. Now, if I'm a person that already has built my wealth and I'm getting income off of that wealth based on, where I got the wealth invested, and I got people doing a yo-yo, a basketball thing with my money. One month I get a check for $1,000. The next month I get a check for $500. That's probably not a good thing for me. If I'm already in the enjoyment stage of wealth, I may want to move my money to safety, and that's what you see a lot of institutional investors have done. They ain't got time for the yo-yo stuff. They just move their money out, put it in U.S. short-term treasuries or money markets or whatever they put it in to protect it. And they say, well, you know something? When we feel more comfortable, we got better clarity. We know what done happened in the election. We know what the feel of the market is. We may move back in. But until they do, on the curse end, on the blessing end, for somebody that's in the building stage of wealth, this is an opportunity for you to pick up some good assets. Because as they run them down, guys, that's an opportunity, in my opinion, to pick up great companies at a discount as the aliens run these stocks down. Right now, they're kind of running things back up in the tech. Well, why do you say that, Richard? Well, I'm reading you the headline right here. It says NASDAQ raises for the first time in 3 days. But that's telling you somebody is buying the NASDAQ. Somebody is buying the NASDAQ 100 companies right now. I don't know who's buying them. If someone was buying them, it wouldn't be down. It's up. It's up because somebody is buying back into the NASDAQ 100 companies, specifically Nvidia and other semis. That's what's happening right now. But for 3 days, I guess Tuesday and Wednesday, we know for sure Tuesday and Wednesday, it was down. So somebody was running the stock price down through selling. Now somebody's running the stock price up through buying, right? So that's my opinion, guys. You guys can come up with your own opinion. I'm just telling you, you got 2 ways to look at this thing. If you're in the building stage of wealth, if you're in the enjoyment stage of wealth, you may look at it differently. I think institutional investors are out right now because they just feel like it's too much volatility around September, around the election. And I think they wanted to protect their profits that they locked in from January to June. They want to protect that. No sense of me working hard and losing that in September, which is a historically trash month for the market. These people ain't stupid. They say, well, hey, I'm not finna lose my first 6 months of gains dealing with a crazy September and then this crazy election that's getting ready to happen. Who knows what'll happen? I'm not losing my gains. So I'm gonna get up out of here. See y'all later. I'm out of here. I'll see y'all after the election, and then might dip my toe back into the pond. But right now, I'm taking my toe and my whole body out of the pond, and I'm going to safety. But on the building stage of wealth side, that's an opportunity for us to pick up discounted assets and hold them until institutional investors are ready to come back into tech. which they will at some point. I don't know when, but they will. They'll come back in at some point. They got to. And the reason I know they got to come in, because in that world, guys, it's what have you done for me lately? See, your clients don't care nothing about 2024 when it's in 2025. They're going to want to know well, okay, big, gigantic company, I'm paying you a 1%, 2% fee to manage my money. I don't care what you did in 24. That's gone. That's in the rearview mirror, baby. I need to know what y'all going to do for my portfolio in 25. Guess what they're going to do? They got to come on back in, baby. They got to come back in. They got to rotate back in, baby, in 25. Just telling you. So for a guy like me, I know that. So what do? It's dip season. I'm going to go ahead and get me some ETFs on discount. And if Nvidia goes under $100 a share, I'm going to pick a little more of that up on discount too, because I know institutional investors got to come back in this thing after the election, December, no later than January. They got to rotate back in, because why? Their big boy clients are going to demand they rotate back in. They're going to want to know what they're going to earn on their portfolio in 2025. They don't care about 2024. That's gone. Thank you for 2024, but I need to know, what are you going to do with my money in my portfolio in 2025? I don't need no money market. I need bigger returns than that. So they got to rotate back in. That's just my opinion. But until they do rotate back in, there's an opportunity for me and many others like me to pick up big boy blue chips on sale, as the aliens are gonna give me the opportunity to do that, because they're gonna keep this thing up and down, especially for the month of September. They're gonna kill it. They're gonna make a lot of money too. But I'm gonna make a lot of money because I'm gonna buy ETFs. Every time I get an opportunity, every time they get them down on the dip season, I'm going in and buying some. And like I said, if the only individual stock I'm going to buy is Nvidia, if it gets below $100 a share, then I'm dip season on that too. Because I know at some point, guys, institutional investors and big boy investors who are long-term guys and gals got to rotate back in, because they got to get, no one cares what they did last year. In this world, guys, no one cares what you did in the past. What they care about is, what are you going to do for me right now? When I got millions and millions and billions of dollars with your firm, I don't care about what you did last year. I care about, how do I get a return on my $1 billion I got with y'all guys this year? That's how this world works. So institutional investors, big boy investors, they got to get back in at some point and rotate back into tech. They're going to have to rotate back in. It could be in December, it could be in January, but they're rotating back in at some point. And that's where I just be patient. Go ahead and grab my assets now at a discount in September and October. I'm gonna be able to grab all these assets at a discount, big boy blue chip assets with historically proven track records of multiplying money. I'm gonna grab them in September. I'm gonna grab them in October. And then if it's still sideways in November, before and after the election, if it's still sideways, I'm going to grab them in November. If it's still sideways in December, I'm going to grab them in December. Because I know at some point in 25, institutional investors have to get back in the game. And I believe they get back in sometime in December, early January. That's just my opinion for me and my portfolio. You got to figure out what your strategy is and what you trying to figure out how do you move in these Bitcoin streets, in these stock streets, right? You got to figure that out. I'm just telling you what my strategy is. So here we go again. The NASDAQ composite rose Thursday, following back-to-back losing sessions, as investors snatched up beaten down tech stocks. See, guys, they're telling you what's happening. See, the 1% will tell you what's happening if you just listen. They're telling you what the play is. They're telling you what the play is. The play is this in September. Beat them down, buy them back up. Beat them down, buy them back up. Beat them down, buy them back up, make all the money you can make before institutional investors get back in. Period. That's it. That's my opinion. And that's what's happening. You see that every single week. Every week in September, in my opinion, this is what you're going to see. You're going to see a beat down for a couple of days, and then you're going to see a rally. You're going to see a beat down for a couple of days, you're going to see a little rally. You're going to see a beat down for a couple of days, you're going to see a little rally. That's going to continue through September and maybe on into October. I don't know. But that's what I see. When I look at the volume from last week, and then I look at the volume from this week, and I look at, okay, earlier in the week, last week, the volume favored sell-offs. Towards the end of the week, the volume favored buying. This week, same thing. Tuesday, Wednesday, volume favored what? Sell. Now all of a sudden we get to Thursday, volume starts to favor what? Buying. Just tell you what's happening in my opinion. So here we go. The tech-heavy benchmark. The tech-heavy benchmark rose 0.4%. The S&P 500 hovered near the flat line, while the Dow shed 180 points. Let me see if I can get this straight here. And it's starting to make sense to me, at least in my little brain. Dow goes to the moon, right? Tech sells off. Hold on. Dow slides down, tech moves up. So what's happening here? Are traders, the aliens, are they rotating in and out of, Dow, which is everything but tech, and then rotate back into tech? Are they selling off tech and rolling into everything other than tech, and then they sell off everything other than tech and roll back into? Is that what they're doing? I don't know. Y'all got to think about that, but lately that's been the pattern, right? Could be totally wrong, but that's my opinion. Popular mega cap and chip stocks led the charge, with Nvidia last up 3%. See how they do that? See how Tuesday and Wednesday the thing was in the dumps? And then all of a sudden, gradually, the little train that could, the little train that could, just picking up a little bit of steam, the little train that could. But guess what? Next week, it'll go back the other way. That's my opinion. But I'm just telling you, you're going to experience this over the next couple of months because Wall Street traders are in charge of the candy store. Institutional investors have left the Wall Street traders with the keys to the candy store. And they say, we'll be back in 2 months. Don't wreck the place. Go ahead and eat all the candy you want, but don't wreck the place. Because when we get back, we want this thing to be ready to go. And that's what's happening. That's my opinion. You guys go out and do your own homework and figure it out for yourself. Popular mega cap and chip stocks led the charge, with Nvidia last up 3%. Meta, Alphabet, Apple rose 1% each. Amazon gained 3%. Now, where in the world does that come from? Where does Amazon come from? 3%. They just had an earnings report that says they missed expectations on revenue, and the stock sold off 10%. Now, all of a sudden, they up 3%. What changed? What changed? What changed? Did a new earnings report come out? Man, y'all got to follow this stuff, man. It's crazy. While Intel edged up 2%. Fresh labor market data Thursday sent mixed signals about the health of the U.S. economy as questions linger over whether the Federal Reserve is behind the curve on rate cuts. Private payrolls, aka ADP, showed the weakest growth since 2021, heightening fears of a slower labor market. However, weekly claims for unemployment benefits declined from the previous week. So you come in lighter on jobs being added to the economy, private payroll jobs being added to the economy. You come in lighter than expected. The only thing saves you is the unemployment claims went down too. It's the only thing saved you. If that thing would have came in lighter and the unemployment claims went up, yeah, that would have been a little tornado, guys. It's the only thing saved us. That's the only thing saved us today. The only thing saved us. That's the only thing saved us. The market has shown hypersensitivity to potential growth scares in recent weeks. That is why you've seen institutional investors rotate out to money market or other safe havens. Now, last year was different. Why was last year different in 23? Because there was no January through June, go to the moon. There was none of that in 2023. You didn't have to go to the moon until the last 9 weeks of 2023. And guess who was still in looking for profit, looking for to edge out a good year? Institutional investors were still invested at that time. They had no other choice because they had made no money in the first part of the year. So they had to stay in all the way through December, which they did, and it worked out for them because those last 9 weeks went straight to the moon. Just telling you. See, it's a much different. Last year, you had the first basically 10 months of the year, nothing. And then all of a sudden, the last 2 months, everything turned. This year, much different. First 6 months to the moon. But institutional investors understand we're coming into the month of September, where it's historically bad. And then you got this crazy election coming up. We don't know what's going to happen with that. Let's take our profits and get out of here. And that's when you started hearing all this stuff about, oh, they're rotating out of tech and they're going into small cap. They're positioning themselves in small cap because when rates come down, small cap companies, they prosper. They benefit from reduction in rates, small caps. So they rotated out of tech, go into small caps. Maybe that's where they're at. I don't know. They ain't in tech, I can tell you that. They definitely not in tech. So they somewhere. Either they're in small caps or they're in money markets. But they're definitely not in tech. Because if they were in tech, we'd be higher, guys. We'd be much higher. We're not higher because they're not in tech. The aliens are controlling tech right now. And as long as the aliens control it, we ain't gonna go higher. Yeah, we're gonna go higher for a day or two. And then they're gonna beat us back down again. Because the aliens, that's how they make their money. They're not interested in long term. They're interested in squeezing you and squeezing you and squeezing every drop of green juice out of you. And the green juice is money. They are not interested in any long-term stuff. They only interested in short-term squeezing you and getting every bit of green juice out of you. That's all the aliens are doing, right? That's what they're doing now. So, however, let's move on. The market has shown hypersensitivity towards potential growth scares to recent weeks, including Tuesday's sell-off on the heels of weak manufacturing data. That puts heightened scrutiny on labor market data, with all eyes on Friday's August non-farm payrolls report. Now, you also could look at it this way. They done beat this thing down all week, right? Let's give them at least one day to propagandize and let's get this stock up a little bit because they done already bought. Now, you got to remember now, the aliens already bought on Tuesday. That's when the aliens bought. The aliens already bought what they were going to buy on Tuesday. Everything you see now are retail investors. They already bought. See, these guys have already bought on Tuesday. Everything you see on Wednesday and Thursday is going to be retail investors. And then guess what they're going to do? As soon as that report come out, watch, it's going to sell off on Friday. It's going to sell off on Friday. I don't care what that report says. They selling off on Friday. They're just setting us up. I keep telling you. Now, some of y'all might say, well, golly, man, if they're setting me up, why would I buy? Because, man, if you're in the building stage of wealth, if you're trying to build wealth when you got no wealth, you got to buy the dip, in my opinion. But you got to be smart when you buy the dip. See, the dip should have been bought when? Tuesday. That's when you should have been buying the dip, in my opinion. Because that's when the aliens was buying the dip. The aliens were buying the dip on Tuesday. If you're buying the dip right now, you falling right into what the aliens want you to do. See, the aliens already bought the dip. That's why you saw on Wednesday, when we looked at those volumes, we looked at the volumes on Wednesday, so you can tell what the aliens are doing, right? Did I get out of that? Let me go back to that real quick. I'm just giving you my 2 cents, guys. I'm no expert here. I'm just a regular schmegler. I don't know what I'm talking about. I'm just entertaining you. This guy don't know what he's talking about. You're right, I don't. But just humor me. Humor me. I'm a crazy guy on YouTube, but just humor me. All right, so here we go. Here we go now. Let's go back to September 3rd. This is when the aliens drove the stock price down. This is when the aliens drove it down. Because remember, the previous Friday, they had closed at 119. That was the opportunity. It's high enough now. Let's drive it back down. So what happens? It opens at 116 on Tuesday, September 3rd. The stock opens at 116. They sold off from the previous week. Remember, the previous week, they closed at 119. On Tuesday, they sold off. That's the reason why you saw from 116 down to close at 108. At the low, it was 107 on Tuesday. That was the aliens selling off. That was the aliens selling off. Okay? That was on Tuesday. So the aliens sold off, and you had 475 million in volume. And most of that was sell-off volume from the aliens prior week. Okay? Then we move into Tuesday. Price starts at 106. Guess what happens? Aliens start buying in. I'm telling you guys, the aliens started buying in pre-market on September 4th. Pre-market, they start buying in. Right? They start buying in. I'm sorry, I take that back. They started buying in pre-market, but the price opened at 105.41. 105.41. That's when it opened, right? And then it goes, and then it closes at 106.21. So that tells me they're buying in. 371 million in volume. You open at one thing and you close higher. To me, that says most of that volume was buying. You open at one price, 105, you close at 106. So a lot of that volume, in my opinion, was buying. Now you look at today. You open at 104. Right now, it's currently at 106.67. Currently 165 million in volume. So we'll see tomorrow. We'll see what happens tomorrow. We'll see what happens tomorrow. I believe it sells off tomorrow. That's my opinion. But you guys go do your own homework and figure it out for yourself. I just believe tomorrow it'll sell off. I could be totally wrong, but that's my opinion. And that's what I do here. I give you my opinion. While incoming data is mixed, it is not collapsing, and the global cutting cycle should help the economy achieve a soft landing, extending the cycle into 2025. head of European equity strategy at Barclays. We see this as a broadly positive environment for equities, but a lot is arguably priced in, and there are a number of wild cards to get through. See, in my opinion, the 25 basis point rate cut is already priced in, guys. I mean, 100% of the market believes it's going to be a 25. So there ain't no tailwind for that. I mean, maybe a little bit, but not no big tailwind because it's already priced in. Far as the labor report tomorrow or the jobs report, I think it will come in probably right around expectations. It may even be a slightly lighter. But again, I don't think that's going to make a big difference one way or the other unless it's just some crazy skewed report. I think what's going to happen is going to sell off either way. That's my opinion. But again, I'm not an expert here. I'm just giving you my opinion. I recommend everybody and anybody go out and do their own research and figure out what you believe is going to happen and then position yourself that way. Don't listen to me. You go out and do your own homework and position yourself how you believe you need to position yourself. But if I'm a person that's trying to build wealth, which I am, and things get low enough, I'm smart enough to know that's a good opportunity for me to build some wealth by buying in the red. That's all I'm saying. And I just think with institutional investors out of the market, it's left to the aliens, and it doesn't matter what good information, bad information, good report, bad report. They're hell-bent on doing what they do. They've already proven that. So I don't believe the report coming in perfect tomorrow will stop a sell-off. That's my opinion. Now, it could spark a bounce, but we'll see. We'll see. That's why we watch. We'll see exactly what happens tomorrow. We'll see. We certainly will see. So we see this is a broadly positive environment for equities, but a lot is arguably priced in. Talking about the rate cuts, right? So Tesla popped 6% after the electric vehicle maker said it plans to launch its full self-driving software in Europe and China early next year. Frontier Communications dropped 8% after Verizon said it would buy the company in a $20 billion deal, valuing it below Wednesday's close. Verizon added 0.3. Thursday's pre-market moves come after the S&P and the NASDAQ each closed lower for the second straight session. The Dow squeezed out a gain of 38 points. All three averages are down for the week ahead of Friday's August non-farm payrolls report. So that's what you got, man. Early right now. Well, not too early, but a couple hours into normal trading. Now you got the Dow all the way down by 300 points. That's the Dow. It's all the way, it's down 300 points so far today. Now let's move on and let's cover, let's see, what do we want to cover here? Is this the one we want to cover on Nvidia? Yeah, Nvidia plunges in Thursday's pre-market. What's behind the stock's incessant sell-off? Yeah, let's talk about that real quick. Let's talk about that. Good to get an expert's viewpoint on this. So Nvidia stock appears on track to fall yet again on Thursday as macroeconomic concerns sap the risk appetite of traders. Nvidia's woes. Despite Nvidia's earnings getting high praise from sell-side analysts, investors have been incessantly selling the stock on fears that the Jensen Huang-led company can't keep on delivering superlative financial performance. The stock peaked at $140.76 on an intraday basis on June 20. Shortly after the stock split took effect and the dividend date. The record closing high is 135.58, reached on June 18. Nvidia shares were on a broad consolidation move since then, before the yen carry trade unwinding wrecked the global markets and the artificial intelligence stalwarts stock came down with them. On the day of August 5th global sell-off, the stock hit a low of $90.69 and bottomed at $98.91 on a closing basis 2 sessions later. Even as it staged a comeback, the second quarter earnings report served as a downside trigger, despite the company reporting year-over-year and sequential earnings and revenue growth. A lack of resolution regarding the Blackwell 200 shipment timing also exerted downward pressure on the stock. So here's the macro stock. The stock's struggles aggravated further as soft economic data stirred recession concerns, and this heavily impacted growth stocks. To make matters worse, reports of the Department of Justice subpoena regarding monopoly in AI chips did the rounds, although the company denied it. So remember, they came out with that propaganda. I don't know if it was yesterday or on Tuesday, but they came out with the whole subpoena thing about the monopoly. They got a monopoly, blah, 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 blah. Again, that's all propaganda, doing what to drive the stock price down, which was successful. Immediate support is around 103.60, and a break below the level could take the stock to 101.50, the level to which it gapped up in late May. On the further downside, it could drop to psychological resistance of 100. The next support is around $95 a share level. In pre-market trading, the stock fell 0.89% to 105.26. So yeah, man, again, you know, who knows what's going to happen. Personally, like I told y'all, I'm a buyer at under $100 a share. I'm not going to mess with it higher than that. I am a buyer at $100 a share or lower. Definitely a buyer at $100 a share or lower. I'm not going to get myself into this anymore until it does that, because at this point, buying it, in my opinion, at 105, 110 is okay if you're a long-term, if you're going to stay in this thing for a minute. But when my cost basis is already under that, I just don't want to buy it anymore above my cost basis. If I'm going to buy it, it has to be below my cost basis. That's the way I look at it. You guys may look at that differently, but I look at it as I got to buy it below the cost basis, right? Now here's one last thing on the video, and then we're going to wrap this thing up. Here's the headline. Time to load up, says investor on Nvidia stock. So you do got people out there, guys, that are still pretty bullish on this stock, and they believe right now is a good opportunity to load up. Now, whether that's right for you or not, you got to make that decision and figure that out. I ain't got nothing to do with that. You got to figure that out. But I'm just reading here what one of the experts is saying. So here we go. While the full impact of the AI revolution is still unfolding, Nvidia is well positioned to lead innovation in this space for the foreseeable future. As major tech giants intensify their investments in AI development, Nvidia is poised to reap substantial benefits from these initiatives. Now, they had solid, fiscal Q2 25 numbers. We already know all the numbers, so we know that. But I want to get to what this expert is saying. So it says, although its data center division is the crown jewel of its AI empire, Nvidia's success extends beyond just this revenue stream. In fact, investor Vinay Utham believes that Nvidia is on the cusp of unlocking significant value from other areas of operation as well. So we know about the data center revenue, but he's saying there is more revenue coming outside of the data center revenue. Uthram points out that Nvidia has multiple avenues of expansion in the coming years, including sovereign AI collaborations with national governments. The recent partnership with Japan to build out an AI-powered supercomputer is just one example of this potential. However, the investor saves his most enthusiastic outlook for Nvidia's efforts in the automotive sector, especially given the growing focus on self-driving cars. As automakers pivot towards building autonomous vehicles, the automotive division of Nvidia is set for years, if not decades of growth, Uthram opined. The evidence is starting to accumulate, says the investor, as Nvidia's automotive and robotics segment generated $346 million in Q2, representing year-over-year growth of 37%. The growth was powered by ramps in self-driving platforms and a surge in demand for AI cockpit solutions. In addition, the company's latest version of its advanced driver assistance platform, Thor, has already been adapted by a number of major players in the automotive sector. While the AI revolution is attracting the most attention, Uthram writes that there is a parallel process taking place in the automotive industry that is thirsty for big advances. Nvidia, in my opinion, this is the expert, Nvidia, in my opinion, is one of those rare companies that stand to benefit from both. The investor summed up, seeing a company that is firing on all cylinders. Uthram rates Nvidia as a buy, right? Overall, the market's love affair with Nvidia shows no signs of slowing down. Over the past 3 months, the stock has received 39 buy recommendations and just 4 hold recommendations, earning it a consensus strong buy rating with 12-month price target of 151.79. That represents an upside of 41%. So there you go, man. Just wanted to give you a little bit of, hey, man, it's more than just data center revenue. There are other avenues that this company is pursuing and are starting to make, some progress on, specifically the automotive industry. They really believe that industry, with their technology, can be a home run for them in the near future. So I think what you'll find with hyperscalers, as they continue to build out AI and figure out how to make money with AI, which they will, then I think that will solidify the data center and the hyperscaler cloud services businesses. It'll solidify Nvidia as a supplier of chips to those hyperscalers and the mega caps. Right now, that's the whole gripe. The gripe is, okay, Nvidia's making all this money, but the hyperscalers who are buying the chips ain't making no money off of the CapEx investment. So that's where they're saying, hey, we want to see the hyperscalers make money too. That tells us it's sustainable. What happens if the hyperscalers 2 years from now decide they're going to scrap AI and don't spend any more money? Then what happens to Nvidia? Where does it revenue go then? So again, definitely a logical question, logical point, but I think the hyperscalers see the benefit in the investment that they're making for a long-term growth. You gotta be in front of this thing or you last. You first or you last. And that's how the hyperscalers see it. I don't think they're gonna stop spending anytime soon. And I think they're already seeing not maybe top line revenue growth, but they're definitely seeing better margins because of, increased efficiency, right? Increased efficiency in their platforms that they use these chips in, and this artificial intelligence platforms that they're building out. They're starting to see efficiency, better use of energy, right? So although not equating to top line revenue right now, you still see better margins because you're reducing expenses, right? You're going to reduce some expenses when you gain more efficiency, especially when you're talking about these large language systems and you're talking about these large cloud service providers and these big old data centers and all this stuff. When you introduce efficiency, that reduces expenses. So therefore your profit margin gets better. Your top line revenue may not get better right now, but you still get a better bottom line because your expenses are being tweaked and tightened. So I think it's there. I think it'll happen at some point. I think for me personally, guys, I'm just going to stay patient, right? I got 11,200 shares of this stock. I'm going to stay patient. I'm going to continue investing into the tech sector through FTEC, which is my information technology ETF. I'm going to also continue investing heavily in the S&P 500. I think we have an opportunity to do at least anywhere between a 15 and 20% rate of return in the S&P this year. I think I got a good chance to do anywhere between a 20 and a 25% return in FTEC. And I think I'm in that 30% return in the Mag 7, even with September being down, potentially October being down, and potentially November being down, because I think December we get a jump, because I think people or investors will want a last bite at the apple before the end of the year, and I think we get a bump. So even with 3 months that are not good, you got 9 months of good. Now, 3 months of bad can wipe out 9 months of good, but I don't think that'll happen. That's just my opinion. You guys go out and do your own homework, come up with your own conclusion. I'm not an expert here. I'm not a financial advisor. I'm not a CFP. I'm just a regular guy giving you my opinion. So hopefully the information I shared with you today get you to thinking so that you'll go out and do you some research and figure, hey, is this paper asset thing something that I want to dip my toe in? Or, hey, I've been messing around with this thing a little bit. Maybe I want to ramp it up. Maybe I want to ramp it down. I don't know. You got to make that decision. For as I'm concerned with my portfolio, I'm going to continue to ramp up the ETFs part of the portfolio, but I'm going to ramp down the individual stock purchases and ramp up the ETF purchases for these next 3 months. September, October, November. So those next 3 months, I ramp down individual stocks, ramp up ETFs, and then be ready to go in December to get one last bite at the apple on individual stocks before we roll out of 24. And maybe institutional investors at that point get a little greedy and they want a little last bite at the apple. I'm gonna jump on their bandwagon and maybe I go and grab a few more extra basis points out of that before the end of the year. I don't know, but that's my game plan. Game plan next 3 months, ratchet down to basically zero on individual stocks unless Nvidia gets under $100 a share, but then ramp up ETFs. So that's where I'm headed. So the money that I make, instead of buying individual stocks, boom, boom, go back to ETFs. Just get all the dirt cheap ETFs right now while the aliens control the stock market. While the aliens control the stock market, I'm just gonna ramp up on ETFs because they're gonna be dirt cheap. I don't care if it's VGT, VOO, SPLG, QQQ, I don't care what it is. If it's in the tech space, it's gonna be dirt cheap. Well, not dirt cheap, but it'll be cheaper than it was in June, put it that way. Because I can tell you right now, even on, let's go back and let's look at one of the big boys. Let's look at VGT. Let's just look at VGT. That's a good measure, right? Let's look at VGT. What is VGT trading at right now? See, VGT right now is at 545, guys. And let's go look at the high. VGT stock price high for 2024. What was the high for VGT? I don't want to know what the prediction is. I want to know what the high was. Looks like it was, I know it was over $600. I don't know why they ain't showing it to me, but I know it was over $600. Let me see what it was. I believe the high was over $600, if I'm not mistaken. Maybe I'm wrong. Let's see. I'm just trying to give you, oh yeah, there it is. There it is. There it is. Yeah. So on July 15th, VGT topped out at 609. And that was on July 16th, 2024. VGT topped out at $606.38 a share, guys. This was VGT, Vanguard Information Technology VGT. Now, what is it trading at today? God dog it. Come on here, man. Here we go. It's a ragged internet of mine. Can't get this thing to work. Here we go. All right, let me see if I can get this thing to work. I think it was 5 something. I can't, this thing is acting stupid now. Okay. Yeah, so nevertheless, 606. And then I believe right now it's at 543. 606, 543 right now. That's a discount, guys. I'm just telling you, this is what I'm trying to tell you. There's an opportunity here. I just don't understand what's wrong with this phone today. There's an opportunity here. 606 minus 543, $63. See, here's how I think. If VGT got to 606, at some point, it will return and go higher than that. Just go look up the numbers yourself. I mean, go look up the numbers, baby. 606. And now it's at 543. So that's over a $60 per share drop in 2.5 months, almost 3 months, right? So my point is this. If I'm a betting guy and I like paper assets and I like big boy blue chip, there's an opportunity for me to go buy VGT at 543 or lower as the month goes. Maybe I just watch it and see if it goes lower, right? Maybe I just watch it. And if it dips below 550, dips below 540, now all of a sudden you're saying to yourself, goodness gracious, the next real rally we have, this thing will go back to $600 a share. It's VGT. You're talking about a fund that has $500 billion in it. This is a fund that has $500 billion in the fund, guys. Big boy. Big boy. Let's look at VOO. Let's try VOO and see what we see on VOO. Let's see what VOO is doing. By the way, VOO has about $1.1 trillion in the fund. Go find another S&P 500 ETF that got more than that in it. I don't think you can. Right now, where we at? We at 503.98. Now let's go look at this one and see what was the high. Let's see what was the high this year. See if I can find it. Okay, looks like it might have been 519. I don't see anything higher than that. I think 519 might have been the high. So not as much downside on that one. I think 519 might have been the high. That's what I'm seeing here. So not a lot of downward pressure on that one. Little bit, but not as much as VGT. Why not? Because VGT is an information technology ETF. It's all technology companies, whereas the S&P 500 is not all technology companies. It has 11 sectors in it, every industry, every sector. So you probably won't see as much downside because obviously you got the top 7 companies, which are the Mag 7, But then you got all these other industries in there. So you're not going to see as much downside on VOO because it's more diversified. You'll see more downside on VGT because it's all tech. Now, it's diversified through 300 and something tech companies, but they're all tech. So VOO has a limited downside, whereas VGT has a more, it has more deeper downside. So my point is this: a guy like me that says, okay, boom, I'm a go to zero on buying more stocks, but I'm gonna go higher on buying. Where do I want to focus? For me, the opportunity is VGT more so than VOO. That's just for me. So that would be the opportunity. Okay, can I dip into VGT, throw some money at that from the reserve, and then hopefully within a 12-month period, pick up that $60 a share or a little more, depending upon how deep of a discount I get. So yeah, so that's where my head is right now, guys. That's what I'm gonna be focused on, is that right there. And again, I'm buying FTEC right now, but you got to understand, anytime I can get VGT that low, I'm not going to buy VGT at $600 a share. But if I can get VGT, now it has already proven it can get to 606, 609 just 2 months ago, 3 months ago. And if I can get it 550, 540, 530 over these next 3 months and just be patient for 12 months, I could potentially make myself $70 to $100 a share in VGT, which, if you know anything about VGT, huge run-ups, more so than FTEC. Now, I'll buy FTEC through dollar cost averaging, but I'll buy VGT out of the bulk money that I have. I'll go take bulk money and buy VGT and continue to just dollar cost average in the FTEC. Because right now, VGT is starting to get really appetizing for me, because now you're talking about, if I can hold this thing 12 months and when things return to normal and we hit the next rally, longer term rally, this thing going back over $600 a share. So the deeper I can buy it, 540, 530, maybe 520, now I'm looking at $100 per share on VGT when this thing gets back to glory. That's what I'm talking about. That's the safe bet for my money right now, as opposed to chasing individual stocks. Well, all right, guys, appreciate y'all. Again, not a financial advisor, not trying to tell you what to do by no stretch of the imagination. I'm just giving you what my game plan is as a regular pedestrian, as a regular schmegler. I'm just giving you my game plan against the aliens. The aliens got all the technology, they got all the money, they got all the manpower, but I'm telling you my strategy against the aliens over these next 3 months. I'm gonna do what the aliens, whatever the aliens give me on the dip, I'm gonna take it if it's deep enough. So I'm gonna just wait for the dip on the aliens and just get as deep of a dip as I can get. When the aliens are running this thing down to the basement, I'm gonna try to pick up as deep of a discount as I can get in something like VGT. So I'm hunting for VGT right now because I see such a great opportunity. Already $60 off of this year's high. It's $60 off of this year's high already. And we're just in like day 3 in September. What do you think is going to happen to that thing when we get deeper into September? That thing might go down to in the 520 range. Ooh, if it does, boy, I'm all over it. I'm just letting you know. I'm going to watch this thing like a hawk. If it keeps sliding, which it will, it's going to slide more, because I'm telling you what the month of September is. It's going to slide more. And when it does, I'm going to be right there to pick it up, and then I'm just going to be patient, because I know it goes back to glory within 12 months. Why? Because institutional investors are going to be getting back in this thing in either December or January. They're back in the market because they have to. Starts a new year. It's what have you done for me lately? So they got to get back in. Well, thank y'all, man, for rocking with me today. Do me a big favor. Get down in that description box and click on that Moomoo link. Get yourself up to 15 free stocks when you open a new Moomoo brokerage account. You put $100 in your new Moomoo brokerage account, you can get yourself 5 free stocks. You put $1,000 initially in your new Moo brokerage account. You're going to get 15 free stocks of publicly traded companies. Who knows, guys? You might get a hyperscaler. You might get a mega cap, right? You might get the other 10 industries. You might get a semiconductor. Who knows? Who knows? So do yourself a favor. Don't cheat yourself, treat yourself. Get down to the description box and treat yourself to some wealth through those 15 free stocks. They hold a value, guys. You can hold those stocks and let them mature, and hopefully they increase in value, or you can get them, you can sell them, and then turn them into cash and then reinvest back into something else, or put the money in your pocket. That's up to you. They're giving you the free stocks because they want you to try their brokerage app. So please, don't cheat yourself, treat yourself. Get down in the description box and click on that Moo link. Go get that free stock. Go get that free money. And then if you don't know how to use the brokerage app, send me an email through my website, www.richardfain.net, which is the second link down in the description box. Send me an email and say, hey, Richard, I opened my Moo account. I funded my Moo account. Do me a big favor. Send me those tutorial videos so that I can sit down and watch them and learn how to use this app so I can potentially go dip season hunting. You hear me? Not deer season, but I put dip season hunting, dip season hunting. And I'm gonna send you them tutorial videos so that you can learn how to use this brokerage app and get yourself off to a good start to dip season hunting, right? Dip season hunting is amongst us. And there's a lot of dip out there for you to hunt. It's a bunch of dip to hunt. So go dip season hunting with your new Moo account, with your 15 free stocks if you put $1,000 in there, with your 5 free stocks if you put $100 in there. And then, like I said, send me the email and I'll send you the tutorial videos. And also, guys, while you're down in the website or on the website, think about joining the Wealth Builders, fastest growing financial community on Patreon. We have 1,000 plus members in there in less than 5 months. Great community. We do very good things over there by helping each other and encouraging each other and bouncing questions off of each other. And hey, I got this one, I got that one. What do you guys think? And again, the motto is nobody's an expert. Nobody tells anybody what to buy, but we do give our opinion when we're asked. And the other motto is, here's the mission, here's the investor mission statement that we live by. Traditional investors, buy and hold, big boy blue chip long term. So we're not going to be talking about no crypto. We ain't going to be talking about no Forex trading. We ain't going to be talking about no day trading and all that other stuff. No options trading. We ain't doing any of that over there. All we're going to talk about is traditional, buy and hold, big boy blue chip long term. If you are okay with that, come over and join us. Come over and try us out. Give us a shot. We're very active over there every single day. I do weekly Q&A sessions through a live stream on the Patreon platform for the Wealth Builders. They're ask me questions, and I, of course, offer my opinion based on my 30 years of experience buying paper assets to build wealth, buying real estate for income to build wealth, and building businesses, right? I've done that for 30 years. I've also been in banking. I was in banking for 25 years in both retail and commercial banking. So I know exactly what banks do and what they look for when they're lending money to people, whether it be businesses or consumers. So we have a lot of conversation around that. We also have a lot of conversation around how to use all of your financial tools to help you build wealth. All of your financial tools. We talk about that as well in the financial community through those Q&As. I do them every Monday at 8 p.m. Eastern time, and we have a good time. We talk about a lot, we connect a lot, and we just continue to reiterate, anybody can build wealth who decides they want to build wealth, right? So get on over to the Wealth Builders through the website and give us a join. And let's see if we can help you figure out some stuff. Let's see. But I can tell you one thing, the Matrix ain't gonna help you figure it out. You better get yourself around some people going in the same direction you going in to help you. Matrix ain't gonna help you. You're gonna be out here by yourself in the matrix. Crab in the bucket mentality. Every time you try to get out that bucket, they're gonna pull you back down. That's the matrix. So you can stay over there or you can come join us. It's up to you. Well, appreciate y'all, man. I'm gonna get on out of here. Thank y'all so much for such a wonderful live stream today. I appreciate y'all for just hanging in there with me and going on this journey with me. It's been a journey, but I'm loving it. I love communicating with people and helping people based on my experience. And I love you guys helping me, because a lot of y'all help me, especially over in the wealth builders. I get a lot of good information from my wealth builders because they're doing all sorts of stuff that fits in that box of traditional investing, buy and hold, big boy blue chip long term. So within that parameter, we talk about a lot of good stuff, right? And again, that doesn't just mean paper assets. That can be real estate. That can be building businesses. That can be side hustles to support your investment activities. So we can talk about all that stuff. And of course, you can direct message me, DM me on the Patreon page exclusively. So it's just you and I having the conversation, right? You can also do that because that's the only place I'm doing mentoring on the internet. I don't do any mentoring through regular generic emails y'all send me. What I'm gonna ask you is have you joined the Wealth Builders? If you say no, I'm gonna say, well, consider it, because that's where I do the mentoring. I'm not answering no questions if you ain't part of the Wealth Builders, period. So get yourself over to the Wealth Builders if you want that extra tutorial help from me or that extra mentoring from me. I'd be more than happy to give it to you, but you gotta be a part of the Wealth Builders in order to have me as one of your mentors. Outside of that, just watch the videos and figure it out on your own. If you want to, you can do that too. Well, all right, man, appreciate y'all, man. I gotta get out of here. It isn't real, but I done kept y'all too long. And I appreciate y'all because we had a pretty decent live today. A lot of activity in the live chat, which obviously spurred engagement and pushed us out to more people. So thank you. I appreciate y'all for that. That's the reason I got the live chat on, because YouTube love it. They love it. And it pushes this thing out to more people. That gives me the opportunity to help more people. So that's the reason I have the live chat on. Now, if you don't like the live chat as an individual watching, you can always turn it off. Just click it off. Me, I leave it on because the algorithm loves it. And I love the algorithm when it loves it because it pushes my channel out to more people. So thank y'all, man. Do me a big favor. Lock it in with a thumbs up before you get out of here. I also want you to stay strong and stay long. Thoughts become things. See it in your mind. Hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. I'm going to catch you guys on the next one. Peace.